Today we're going to talk about the difference between Forex, shares, and futures trading. Stay tuned, traders. We'll be right back. G'day traders, I'm Stacy Burke from Stacy Burke Trading. Today we're going to be talking about some of the differences between Forex, shares, and futures trading. I received a couple emails asking me to maybe go over the differences between the different types of markets, why it is that I focus on Forex, sort of some of the reasons why I don't particularly try to trade the shares or the futures markets, although there are ways to do that quite successfully. It's just that my forte is the focus is on Forex, but I'll talk about some of the differences today that will help maybe clarify that for some of the traders out there. So Forex or foreign exchange, shares, stocks, whatever you want to call them, futures markets, of course all the commodities, index futures, the metals, softs, different types of, again, corn, wheat, the agriculture futures, hogs, all those different types of markets. It's really important to understand the market that you're trading. Now, one of the things that attracted me to Forex was the high liquidity and the scalability in terms of the leverage. The market is huge enough that $5 trillion a day, it can absorb basically any size of trade. But it also trades 24 hours a day, 5 days a week, which allowed me to potentially maybe choose the time of day that I wanted to trade it, but not be worried about overnight gaps or differences between closing and opening prices, as what you'll often see in shares and futures markets. So just talking about some of the differences, the structure of the market, basically, Forex is an over-the-counter market. So that's trading that's done through electronic transmission type trading. It's not done at a central exchange. Probably early on it wasn't as regulated as it is now, but there is no central exchange for currency, but the data is distributed by a couple of main, mediums that sort of handle all the bank's main transactions to give the market their pricing. So it's what they call over-the-counter. So it can be done by mail, computer, or internet, any type of electronic medium, phone, whatever. Whereas shares can be done over the counter. Now I don't know a lot about that, but it can be done over the counter. I know in the States they have a lot of that. I'm not sure if we have that in Australia, but mainly it's done at central exchanges like the Australia Stock Exchange, like the New York Stock Exchange, the Pacific Stock Exchange, Pacific Coast Stock Exchange, whatever they are. Vancouver Stock Exchange doesn't exist anymore. The Toronto Stock Exchange. There's different markets around the world, but they're done at central exchanges. And that's where the trading largely takes place. You might do it electronically, but it's done by traders there executing the trades or the electronic mediums. Futures, same thing. There's the futures markets that are around the States, New York Mercantile Exchange, the Chicago Board of Trade, those types of exchanges where the prices are actually exchanged in those buildings. So coming back to, that's really not that big of a deal, because now we're getting primarily into all electronic trading, but it's centralized, and you can go back and check your trades at these exchanges if you're worried about fills or slippage or different types of things. Whereas with Forex, it's a little bit harder to regulate that because there is no central medium of exchange. Now, just in terms of volumes, Forex, as you can see, roughly it's about $5 trillion US a day. Now, again, these figures probably vary a little bit, but shares equals about 300 billion US a day. Now, that's global as far as I'm aware. So you can see there's a significant amount of difference in terms of the volume. So again, maybe you don't have to be worried if you're trading smaller shares or something about somebody manipulating them or moving the price, or a large person, a large entity controlling a large block of those shares and controlling the price if you're trading them. 300 billion isn't quite the same as 5 trillion. And then in futures, 600 billion. Again, there's large players in the industry that potentially can move the markets short term. It's a little bit more difficult to do it in a $5 trillion US market. Highly liquid, highly liquid. In Forex, it's mainly done on a spread basis, so the difference between the buy and the sell price might be a pip, 2 pips, 4 pips, depending on if you're trading an exotic pair, maybe even more. But that's what they call the spread. So you may buy at a certain price, sell at a certain price, and the difference in between goes to the broker. Whereas in shares, often you may have a spread, a commission, and some additional fees. Now, if you're trading CFDs on shares, you'll probably have a spread. Just generally speaking, there may be a spread between the buy and the sell price, just between the buyers and sellers in the market itself, in the market depth. There may be other additional fees varying from broker to broker, and the same thing applies with futures. There may be a spread depending on the market that you're trading, and there will also most likely be commissions and additional fees that can come with those types of trading. Now the hours, so again, Forex, 24 hours, 5 days a week, that gives you an opportunity to be able to, you wake up in the middle of the night, you want to get out of a position because there's been an explosion somewhere or an atomic attack or something. You can get online and just get out of the trade. Whereas if you're in shares, you may have to wait until the next morning for the market to open, where there could be a significant gap in the price from where it closed the previous night, against you or for you. And the same thing can apply in futures. If you ever look at these charts, you'll see that their opens and closes are fairly erratic, even if the market is generally in trends in that. The market open and closing prices are often, there's a gap between them, whereas in Forex, the price action from Monday to Friday is most of the time continuous. In leverage, again, Forex, you can get up to, in some cases, probably 400 to 1, which gives you access to controlling a large basket of currency in any one particular trade. Shares, CFDs, margin lending, whatever, probably up to 2 times what you have in your account. And in futures, probably up to 10 to 1 roughly. So there's a significant amount of leverage that you can utilize in Forex. And again, there's lots of movement and volatility in the currencies. There's always something moving out of all the different pairs. If you're in the share market and you're trading and you're in a down market, even though there are shares that will trend upwards in a down market, again, it's the old saying, a rising tide lifts all ships. And in a down market, that can drag across the board and be harder and harder to find shares that are fairly liquid, that are offering opportunities to trade or to be in and out of the market with. Futures, again, there's lots of opportunities in the futures markets. But again, with currencies, you've got access to multiple pairs, and again, significant amount of leverage. So depending on what you're comfortable with, some people like to stick with a centralized regulated exchange. But again, currency futures, you can do futures, Forex, indexes. Nowadays, they're offering different instruments that you can trade through different broker platforms, sort of similar to a CFD with increased leverage. But you should be able to understand and study whatever instrument that you're trading, know all the ins and outs of it. If there's an open and closing time, the amount of leverage, all the different things, the margin amount that's required for each position that you're going to have in the market, and just making sure that you're aware of all the little intricacies, especially the open and closing price gaps that can often happen with futures and share trading. So hopefully you got some value out of today's video, traders. If you're trading different instruments, just make sure you know all the ins and outs of the instrument that you're trading and the exchange itself. So hopefully that helps. And if you haven't done so, go to my homepage, get my 7-step daily routine for high performance traders. Create the daily habits and routines, goal setting, accelerated learning, journaling your trades, mindset training, working on the vision of the trader that you want to become, and hopefully working in a direction of constant progress. So stay disciplined, stay focused, and may the markets go with you. Hi traders, it's Stacy Burke from Stacy Burke Trading. If you haven't done so, please head over to my website at stacyburketrading.com. I create updates on almost a daily basis, and I would love for you to receive them. Just click on the blog. If you want to enter your name and your email address, I'll send you my free audio program, the 7-Step Daily Routine for High Performance Traders. This is essential knowledge for all traders in all markets, and this is for helping traders to master the market with discipline, confidence, and a winning mindset. I appreciate all your feedback and comments. As always, traders, stay disciplined, and may the markets go with you.